Hello traders and welcome to another video review. Today is Thursday, May 11th, 2023. Let's take a look at the Forex calendar for today. As you can see, the main event of today is the Bank of England interest rate decision, scheduled for release at 1 p.m. The market participants expect a hike from 4.25% to 4.5%. This is the marginal interest rate hike. Nevertheless, that's another in a row from Bank of England, if of course happens. At the same time, we got the Bank of England MPC Meeting Minutes release, and then 2 hours and 15 minutes later, we got the speech from Bank of England Governor Bailey. The other very important news for today are PPI data release from the US and initial jobless claims data release at 2:30. So it looks like we should take a look at the pound today, because the interest rate decision, very important event of today. So let's start with British pound to American dollar. The 4-hour chart of the British pound to American dollar is showing us another local swing high, which is located at 1.2678, but this is clearly bearish engulfing pattern on a 4-hour chart. So it looks like some kind of a news might be already in the price, discounted by the markets. So let me just play with my chart a little bit to show you guys the newest technical resistance, and of course the swing high 1.2678. that's obvious. The other technical resistance, which is now very important as well, 1.2667. so that's the big red line here. And as you can see, we had the wave A of the correction, wave B, and now we are developing wave C on the 4-hour chart. So where is the next target? 1.2577, and the other one is of course the lows of the 1.2559. So this situation here on the British pound looks like the market is under the influence of the bears apparently, and all of this structure here, you see, it doesn't actually looks that much bullish basically. Of course, it doesn't look impulsive as well. The momentum jumped to the level of the 65, but then decreased very quickly towards the level of 50. So please notice that any breakout below these two supports and then below the 50 periods moving average would likely result in another wave in the momentum, of course, to the downside, and this movement here might extend even lower. If we put some sort of the channel here, even if that will be the parallel channel from the lows of the middle of the April, and let's say this channel will look like this. Let me just remove the magnet. If the channel will look like this, you can see that very soon we might have some kind of a test of this upper channel boundary. So that's another, let's say, reason why this area might be tough for bears to break. However, if there is no hike today from the Bank of England, we might see very quick, dynamic and aggressive reversal from these highs here towards even the levels of 1.2433 and 1.2385. So please keep an eye on the British pound today, because we are going to analyze another market very important for today, British pound to Japanese yen. The situation is kind of similar here. We have this movement to the upside, right? We are still trading above this moving averages on the 4-hour chart, right, since the cross. However, recently we got bearish engulfing pattern. We got this pin bar here. Let me just zoom in so we can sort it out, and it looks like this market is under the bearish pressure as well. So the local high, magnet is back on my chart. There you go, local high, and well, the old one, of course, not the newest one. Local high tested again, and tested here is very, very important technical support right now, 164.90. For any breakout below this level means that we are entering the bearish zone. So right now we are testing the lows from the night, 168.07. Any breakout lower, we can test the 100 periods moving average around 168.72, and then there it goes, the key technical support. Where is the technical resistance? Of course, the swing high at 172.30 is now the technical resistance, will act as a technical resistance, and the whole structure right now as it develops, so let me just take a look. There you go, looks like the ABC. Look, that's the wave A, again that's the wave B, we are missing the wave C to the downside. Unfortunately, momentum keeps helping the best. I mean, unfortunately, if you are bad, that's all right for you, but anyway, the momentum is negative 35 points. Definitely there is still some room. Let me just make it bigger. Definitely there is still some room to the downside. All right, so it looks like this market wants to test the technical support either before Bank of England data release, interest rate decision, or after this interest rate decision. So please pay attention, stay focused. We have this technical resistance here somewhere. There you go, and the wave and the high for the wave B done already. So that's the British pound to Japanese yen. One more market for the British pound is, of course, the British pound and Swiss franc. Now, there's the different situation here on the British pound to the Swiss franc. We, of course, have this technical resistance here. That's the technical resistance for the British pound and Swiss franc. We got the local technical resistance made after the swing high at 1.1272. And this is this consolidation zone, the consolidation zone between 1.1206 1.1260. Not very big consolidation zone, nevertheless it's still valid. Of course, we have the untested level of the local, let's say, support 1.1156, and we have this trend line here from the lows of April, 1.1025. If we can even do the channel, I guess, the parallel channel, no problem whatsoever. Maybe this market wants to move like the like a channel inside the channel. There you go. We are still moving inside the channel. Nevertheless, please take a look at this. A, B, and C done to the upside. This movement to the downside looks impulsive. 1, 2, 3, 1, 2, 3, 4, 5, something like this. This is ABC to the upside. So doesn't actually convincing move. It's not this move to the upside. It's not too much convincing for the bulls, I guess. It looks more like a bearish correction. Nevertheless, there is still a chance for this market to move higher if we break above this local high here, or of course there is a chance for the market to get out of the channel, and that's very, very bearish because we are below the horizontal zone, below the last untested technical resistance, below 50 and 100 periods moving average. We are out of the channel. That's very, very bearish in that situation. Well, let me put one more line on chart and that's it. The next target is, of course, the technical support at 1.1093. So very interesting scenario here. Please keep an eye on it. Please take a look. How do we develop this scenario? We might even see some sort of the triangle here. Maybe, I don't know, maybe, just maybe, some sort of this, let's say, triangle or something like that on the market. So that would be, of course, some sort of the flat triangle or something like that. Okay, but that is the continuation pattern. If this is a triangle, so we are going up, that's the continuation. We should go up and then reverse to the downside. Momentum still strong momentum is still positive, and the market participants basically consolidate and await for the Bank of England interest rate decision. Will they surprise, or will they do exactly as it is expected by the market participants, which is of course a hike, marginal hike from 4.25 to 4.5%. We will see in a couple of hours. Thank you very much for watching this analysis, and I hope I see you guys tomorrow for another part of our analysis for Friday. Thank you very much, and see you guys later. Bye bye.